Good morning from our global headquarters in New York. I'm Manus Kenny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
The first Fed decision of 2025. A pause expected as Powell gears up for a presser with politics on the agenda. Defending U.S. tech exceptionalism. Microsoft and Meta report earnings just days after the DeepSeek challenge. And funding chaos. The Trump freeze on spending is halted for now by a U.S. judge. Good morning, Manus.
Danny, good morning. It's hard to believe we're just 1% off all-time highs. $8 trillion worth of market cap will report today. It's going to be one of the busiest days since 2018. There's a ferocious amount of NVIDIA buying yesterday, but it's still only clawed back 50% of the 19% drop on Monday. Peter Oppenheimer at Goldman's, we spoke to him yesterday, Danny, of course. He said the AI sell-off isn't the start of a bear market. That's triggered by falling profits. It is Fed Day. We're counting down to that, and we go into this Fed, and they're probably quite grateful for all the other noise that they have around the world. Consumer confidence slipping across the board. Yields are down 20 basis points since the middle of January. So you're looking at that move on the bonds, 452. And by the way, the JP Morgan client survey, net longs going into this first quarter are the longest in 15 years.
There you go. That's a good stat for you. Well, we're also keeping our eye on some individual movers. ASML this morning surging the most since 2020. Good news for everyone who's concerned about AI, 7.4% amid a huge earnings beat with strong demand for its chip-making machines.
Plus, LVMH dropping after the sales decline in the fourth quarter, casting doubt on the quick recovery in luxury demand.
Also keeping an eye on Alibaba, rising this morning. The company touting its new AI model that released better benchmark scores than both DeepSeek and Llama from Meta.
And in just a few moments, Jane Foley from Rabobank will join us later in the hour. Setting up for the Fed, it is Andrew Hollenhorst. He joins us then. Danny, I mean, it's a bifurcation really between the reporting that comes today and the chaos in Washington. For me, it's two numbers that really matter. It's Meta and Microsoft and the capex, $65 billion and $80 billion. Justify yourself.
What matters more for this market? Is it the tech? At least in the short term, it has been tech, right? That's been moving this market. But I can't help but wonder if the policy uncertainty, the chaos we had from that order from Trump, is something that really eats into the economic picture. Remember all the animal spirits that were unleashed, this big market rally we had after the election? That was because of this presumed better growth environment. Manus, I talked to private equity leaders yesterday who basically said some of their deals were shaken because they were unsure of things like health portals, if they'd still get funding. You had concerns over a variety of different things yesterday. Does that put capex on hold for different businesses that are affected by federal funding?
Well, look, this whole market was so buoyed up that you were going to have massive exits. We did a private equity interview yesterday, and it's bringing in uncertainty. And the question comes back to much more about, well, what is it that's coming from China? Is it that they are challenging U.S. exceptionalism, or is it just open source versus closed source? And that's probably the rub of the debate.
Yeah, well, to that point, BC Partners' Nikos Stathopoulos, who we spoke to yesterday, said that policy uncertainty could mean that exits go under freeze. One could argue perhaps it's having an impact on consumer confidence as well. We got U.S. consumer confidence numbers yesterday. Look at this. It drops to a 4-month low. A lot of folks citing the labor market as a point of concern. All of this ahead of a Fed decision. Joining us now is Jane Foley, head of FX strategy at Rabobank. Jane, you have consumer confidence waning. Some of the luxury players have started to report worse earnings or a pullback in spending. You have policy uncertainty reigning supreme, especially after yesterday. Have we passed the peak of U.S. growth expectations?
Well, I think that's a very interesting question. But at the same time, all of those factors suggest that the Fed can leave the door open for another interest rate cut, which could potentially sort of offset some of those concerns that you've been mentioning, which is why, of course, today's Fed meeting is really timely. But of course, even last week, the market generally decided, well, OK, so tariffs didn't happen in the first week of Trump's presidency. Again, that also leaves open the potential scope that the Fed can potentially cut interest rates again. So that's why the guidance, I think, from the Fed today is going to be really important. They had suggested at the end of last year that 2 cuts can come today. The market doesn't believe that's going to happen, but at least they may be able to signal that one could still come. And certainly expectations that consumer confidence is flagging, that the labour market is still loosening, certainly suggests that that can still happen.
Jane, the accusation was behind the curve, late to hike, and the accusation was too big a cut in September. How important is it today that Powell openly acknowledges the policy risk that delivers such uncertainty for them rather than shy away from it?
I think it's going to be very difficult for him. I mean, the guidance will still be very tough because he doesn't really know exactly what's coming, or at least when, in terms of some of Trump's policies. So forward guidance is going to be very complicated for that reason. But, if he looks at the economy as it is today, then certainly there should be some room for him to maintain that they can still cut interest rates. But clearly, by the time we get to March, that could be quite different if we have seen, for instance, quite strong tariffs. So forward guidance is going to be very tricky for him today, as of course is probably the topic that he's going to be asked about, whether or not he would cut interest rates if pressed to do so by the president.
And you can't blame him for having a difficult time issuing forward guidance, Jane. It goes back to what you were saying, this expectation that because we didn't get tariffs on week 1 from Trump, things look a little bit better. Is that misguided? Because we have this environment where unpredictability is a feature of Trump policy, not a bug.
And that's right. And all the more so for the Fed to defend itself as being data dependent. So if the data right now suggests that they can cut interest rates, well, that's what they have to do. It does mean, of course, that they will be more cautious with guidance. It does mean that perhaps they could be very cautious with the timing. But equally, they could be accused again of being too late to move. And so, if the data right now suggests they can cut, well, that's what they've got to go with.
Well, last week the President of the United States addressed the global audience at Davos, and he had a very, very clear warning about how Europe is treating them. Let's just remind ourselves.
The EU treats us very, very unfairly, very badly. They have a large tax that we know about, and a VAT tax, and it's a very substantial one. They put tariffs on things that we want to do. We have hundreds of billions of dollars of deficits with the EU, and nobody's happy with it, and we're going to do something about it, but nobody's happy with it. So I think the EU has to speed up their process.
Well, the euro has rallied since he came to power, up over 1%. How vulnerable is that rally? How foolhardy is it to trust that going into an ECB? And that threat, as yet unknown, from the president?
I do think that the euro is a vulnerable currency. I'm not surprised that we have had, the short covering positioning this year, because the move was so significant towards the end of last year. But if we look at just Eurozone fundamentals, it does seem very likely that tariffs are coming. And yet you look at Germany, it's been struggling for the last couple of years, really to move away from stagnation, a negative growth print again for last year, very little growth on the cards for this year. It's struggling to adjust to the new relationship with China, slow growth in China, its biggest export partner. And then, of course, the energy transition. The energy transition in Europe has been very, very costly. There's a war, of course, in Ukraine. That means more defense budget for most European countries, tight labor markets, all of these issues. And it does suggest that if inflation, in the Eurozone, can be back in the box, can be kept low, is returned to benign, then I think the euro, a weak euro, can potentially help Europe with some of these issues. And I think it's against that backdrop that we have to look at euro-dollar, not just from the dollar side of the equation, but from the euro side as well.
Jane, thank you very much. Salutary warning there. It could be the tail risk they come back to life. Jane Foley at Rabobank. There are other stories trending on your Bloomberg terminal this morning. This is what we got for you. Bloomberg sources say that Apple has been working with SpaceX to add support for the Starlink network in its latest iPhone software. Now, this would provide an alternative to the company's in-house satellite communication service. The feature is currently being tested with T-Mobile, and it allows users to send texts, access emergency services when out of cellular range.
Remy Contreau expects full-year sales to fall around 18%, with fewer U.S. customers spending on expensive spirits. But that fall in sales, it was less than analysts had expected. Remy said that U.S. stock levels had improved compared with the second quarter. Online sales as well in Asia and China had grown by more than 10%.
Ozempic has won U.S. approval to treat chronic kidney disease in patients who have type 2 diabetes. Now, this expands the use of the drug, which is already used to treat diabetes and weight loss. Novo Nordisk is also exploring its use in treating other disorders.
Coming up, did DeepSeek tap into OpenAI's tech? Microsoft is probing and think they might have. We're going to have more on the competition next.
It's Bloomberg Brief. I'm Manus Cranny alongside Danny Berger here in New York. US AI firms playing defense amid DeepSeek's rise. Microsoft and OpenAI are said to be investigating whether DeepSeek obtained unauthorized data output from OpenAI's technology to train the new R1 model. Now, Bloomberg sources reveal that the security researchers from Microsoft observed a large transfer of data. This was in the fall by individuals they believe linked to the Chinese AI lab. Joining us more on the story is Tom McKenzie. Tom, look, if this probe, I should say, proves that it did happen, what does it mean for the companies involved? And what exactly do we know so far about what was taken from OpenAI?
Yeah, look, we're being whipsawed, aren't we, in terms of the developments coming through in the AI and tech space as a result of DeepSeek and now this news that maybe when they claim to have done it on the cheap and very efficiency, maybe that's because they were leaning on OpenAI. That again, according to our reporting tied to Microsoft and the suggestion, not confirmed, the suggestion that what happened in this case was that DeepSeek put its smaller model essentially alongside OpenAI's model and used the API or the application programming interface that OpenAI puts out there for a license, used that to suck up some of the data related to inference. That's how models interact in terms of their answers and questions. They use that data to train their model and more efficiently built out that infrastructure, again, that's giving those gains that has allowed them to price it very, very cheaply indeed. We're not talking about the data that actually goes into the training of these models. OpenAI keeps that under lock and key. It's not an open source model, but they do license out to APIs so that developers can integrate that into products and services. It's possible that DeepSeek violated the terms of that license. Again, we have not yet had that confirmed, but it does put a question mark if they're leaning on OpenAI and all the work that's been done there, and of course the training on the back of those NVIDIA chips, then maybe that calls into question just to what extent they can make a clear claim to having built a much more efficient model for that $6 million price tag.
Yeah, but I guess if someone else can just recreate it, it still becomes cheaper just in isolation. And Tom, again, whether or not they used OpenAI's model, it's still going to be a headache for all these tech companies that are going to have to get on a call and justify their capex. We have Microsoft, we have Tesla, we have others, we have Meta reporting today too. What are those conversations going to be like, Tom? What's expected?
Well, that's going to be the scrutiny, isn't it, Danny, in terms of confirming and giving justification. They've got to answer that ROI question. When you have commitments from Meta and Mark Zuckerberg of $65 billion US, when you have commitments from Microsoft of $80 billion, do they come to the idea that actually with cheaper models, more efficient models, you're going to get greater adoption? Longer term, this means more AI being used by customers, consumers and businesses. Could be the argument they go to, and therefore their products will remain essential. Meta particularly, given that its Llama open source models are empowering the products that sit on top of that. They can drive ad revenues, for example. They can get these products into the hands of their customers more cheaply. Adoption picks up. It will be the crucial question for them. We had NVIDIA, we had ASML, I should say, coming out, of course, with their earnings, suggesting, and the CEO very clear on this, Christopher Fouquet, saying he still sees AI as that clear driver going forward. So ASML, again, assuaging some of the concerns around the capex spend on one level.
Tom, briefly, in 50 seconds, Alibaba telling the world that they've updated their latest model, Qwen 2.5 Max. What is it, briefly? How fast is it? What can it do?
Yeah, there are engineers out there on X and other platforms showing that this is a model that can allow you to book flights. It does that for you. It can look at the intellectual property in videos and films. It's a reminder that China is at the cutting edge of developing AI. They have the data, they have the engineers, they may not have the chips, but they're creating efficiencies. It's not just DeepSeek, it's Alibaba and Tencent. They've been in a price war. That innovation will continue.
And as the President of the United States said, it is a wake-up call for everybody. Tom McKenzie. We await the outcome of those investigations. Tom McKenzie on the tech trail. Coming up with Danny and I, surprise spending announcement by President Trump causes chaos in Washington. We'll discuss right here on Bloomberg Brief.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you some front page news, a look at what's making headlines around the world. First up, the FT leads with this, that Meta's Mark Zuckerberg is exploring buying a property in D.C. Sources say potential property has been identified, and it signals his ambition to work closely with the Trump administration. A Meta spokesperson declined to comment to the FT.
That's what you call getting close to the source of power. Next up on Bloomberg, the EU is proposing a phased ban on Russian aluminium imports. The new sanctions package has one-year quota system, allowing 275,000 metric tons to be imported before the ban. Now, it requires the backing from all EU member states and could change before being formally proposed.
Finally, this one was on the front of most, if not every major newspaper, but the New York Times most certainly leading this morning with a judge temporarily pausing the White House's decision to halt trillions of dollars in federal spending. The decision was made to make sure federal agencies were aligned with President Trump's policies. That, according to the White House, it was a day of chaos trying to figure out what exactly was impacted by this yesterday. Joining us now is Bloomberg's Roz Matheson. So, Roz, maybe that question held off for a few more days with the halt at least going until Feb 3rd. But what has been the fallout from this as we scrambled to try to figure out exactly what this policy was?
Well, as you say, even though it's been paused and even though the White House clarified that they meant it to be narrower in scope than perhaps it was initially interpreted, there do seem to have been immediate knock-on effects. We had some states saying they were having trouble accessing key portals, including around Medicaid, around housing and urgent assistance for people. And it seems like this immediately gummed up some of the funds in the federal system. And so it's perhaps highlighting the unintended consequences of this absolute flurry in the early days of the Trump administration to race out a whole lot of changes. Just, a dizzying array of executive orders, of edicts and changes, be it on the domestic side, with the deployment of troops to the border with Mexico, to rules around immigration and beyond internationally, and that some of those things in the blizzard perhaps do have these unintended consequences. It also raises a big question potentially for Republicans going forward, and that is, where exactly is the power going to reside when it comes to the fiscal question? Because generally the legislature in the US does have some control of the purse strings, but is this shifting all of that decision making into the executive, and are all Republican lawmakers comfortable with that happening? So there's going to be interesting to see how that conversation evolves and what is the continued role of Congress, if at all, in any of this. But in the immediate term, even with that halt coming, we are seeing some immediate effects of this announcement showing up for some states.
Yeah, it was either a chaotic mistake or a test of constitutional reach. Federal workers have been offered an email called a fork in the road. So this is all the hallmarks of Doge. This is about get back to work. What are the details of what's been offered to try and get people to resign?
Well, that's right. As you're saying, they're offering buyouts to people who effectively resign, about now, if they don't want to be back at work full-time in offices, and very Doge-like, very Elon Musk-like. And it's interesting to see how that worked for him, because, of course, when he made that the rule at his own business and a bunch of people were laid off or left, they had to rehire some of them because they lost so much expertise that they needed, and they realized they had to bring people back. So perhaps, in this case too, that might end up being revisited, because around 10% of US federal workers work permanently from home, and that can be for a variety of reasons, including their physical ability to get into an office, and many more work partially from home, and whether they're willing to rush to this order or not take the buyout. But equally, a lot of these federal agencies are heavily unionized. And so is this going to get tangled very quickly in a lot of legal action to try and prevent this happening? Will some people take these buyouts and just look for work elsewhere? It's entirely possible. But overarching all of that is the clear sense of a direction of travel from the Trump administration. They really want to shape every aspect of government, from bureaucracy, ministries, agencies, you name it, in what Trump is looking to do with his agenda through this term. And it's going to filter through everywhere.
Roz, thank you very much. Roz Matheson there on the very latest from Washington. We're counting down to an $8 trillion day for equity capital markets. It's going to be a blinder. You've got Microsoft, you've got Meta, and Danny, there you go. We're flat. We're just 1% away from all-time highs on that S&P 500. That's quite shocking given the volatility we've had. It
just underscores who you're going to be listening to, a Powell presser or the tech earnings. We're going to talk to someone who will certainly be listening to the Powell presser. We're going to catch up with Citi's Andrew Hollenhorst. That's next on your Bloomberg Brief. From our global headquarters in New York City, welcome to Bloomberg Brief. Danny Berger and Manus Cranny here. Let's set your agenda.
The first Fed decision of 2025. A pause expected as Powell gears up for the presser with politics on the agenda. Defending U.S. tech exceptionalism, Microsoft and Meta report earnings just days after the DeepSeek challenge. And funding chaos. The Trump freeze on spending is halted for now by a U.S. judge. Danny, good morning. It's a rock and roll day for earnings.
Yeah, and we are already well on our way to unwinding some of the tech losses. The S&P within 1% of its all-time high. The NASDAQ is still up 2% in January. We add some weight to that. NASDAQ 100 futures up 0.3%. You mentioned the earnings. NVIDIA, that is slightly weaker today, but we'll get Tesla, Microsoft, and Meta from the tech sector. Meanwhile, for this bond market, we had a strong 7-year auction yesterday, and then we didn't look back. The rally somewhat continues today. We're lower by just under a basis point, 4.5% on your 10-year yields. Manus, it is a flurry of information. It is whipsaw. What do you pay attention to? Is it tech? Is it policy uncertainty with that freezing order? You'd have to argue it's one of those two. It's kind of like the least watched Fed decision maybe in recent history. It's
almost like we've been flooded with policy, but we're not quite sure what exactly is the policy, whether it's tariffs, whether it's actual engagement with tax. And that's the problem, is that you have a slew, an overwhelming amount of information, but very, very little exacting detail.
And if you are a company in this environment, how do you commit to CapEx? How do you commit to hiring when there's that level of uncertainty, especially if you get federal funding? Yesterday underscored that. The rally that we had seen largely post-Trump was the animal spirits, that business was going to boom. Does that now get thrown into question if policy uncertainty is so acute? We got a good reminder of what that kind of unpredictability looks like in a Trump administration yesterday.
There's only two numbers that you need, apart from the Fed. There's only two numbers on this slate, $65 billion from Meta and $80 billion from Microsoft. Your CapEx, stand up and justify yourself. That is going to be the agenda later on today. Our guest this morning on the Fed is Andrew Hollenhorst. He's looking ahead to the first rate decision of 2025, saying this: pausing rates at this meeting and leaving all options on the table for future meetings will also impart a response to continued policy uncertainty. Delighted to say Andrew is here with us this morning. Andrew, Mohamed El-Erian, I think, encapsulated it brilliantly yesterday. We're in a stop-go pattern now, and we're into the stop zone here. We've been data dependent. Here we are. We're dealing on a daily basis with policy flux. How does he thread the needle today to give himself breadth for neutrality until he knows more about policy?
I think the good news for the Fed is that the data are really setting them up to pause at this meeting in any case. This would be a lot more interesting discussion and a lot more difficult for the Fed if we had things going on in the data that were really pushing the Fed to cut further or pushing the Fed to think about not cutting for an extended period of time. Instead, what we have is inflation that's cooling. I think they're still going to feel good about that. We got a good inflation report for the month of December. And we got a really strong jobs report, so they don't have a lot of urgency to cut. So that just means that at this meeting, it can really just be a place where they take a wait-and-see attitude and say, we don't know what all this policy is going to be. We don't know what the policy will be. We don't know what the timing will be. And we don't know what the economic impact of that will be. So just a really, really easy time for them to kind of step back.
Maybe an easy time for them, save for what I'm sure is going to be a barrage of questions from the press. They're asking Powell how he is viewing Trump's words on interest rates. Look, surely politics is going to be on his mind and trying to defend independence for the Fed. What does that look like, whether it be what we hear from Powell or just the outlook we get from the Fed?
Yeah, we heard this come up in Scott Bessent's confirmation hearing where he was asked about the independence of the Fed. And he said, of course, this administration is going to support the independence of the Fed, but the administration is also going to comment on what they think should happen with interest rates. And we've already heard from President Trump that he thinks interest rates should be lower. So I think we will hear that. Maybe we'll hear that today from the president. We'll hear that at some point from the president. And Powell will respond to that in the Q&A. How will he respond to that? I think we know. He'll say, we're data dependent. We watch the data. We follow the data.
Yep. Well, that's got to pivot to policy at some stage. What's worse for the Fed? One-off massive 20-25% slapper taxes or progressive universal gradualism in terms of understanding the policy they need to execute?
Yeah, I think anything that is more gradual, that has more of a runway to it, is going to be easier for monetary policy to respond to. What's very difficult is when things happen very rapidly, they're unexpected. Bank of Canada also has a policy meeting. Right? They have to incorporate these things in their policy making. So that makes it very difficult if there's really uncertainty about big, sharp changes. If what we have is tariffs that are coming online slowly and over time, that's something that the Fed can more easily adapt.
But there's uncertainty around tariff policy, around federal funding, around immigration. There is so much going on at this moment. At what point does that have an impact on U.S. growth as businesses kind of step back and pause as they also try to figure out what's happening?
It's been interesting if you've watched the survey data. We did see some surveys. NFIB small business is probably the best example where there's really a surge of enthusiasm post-election. Since that time, the data have been more mixed. So I think ultimately it comes down to what is the actual policy? Yes, sentiment matters. I'm not saying that it doesn't matter. There can be kind of this virtuous cycle where if businesses think things will be better, then kind of power of positive thinking, things actually will be better. But to your point, what's going to matter? What is the fiscal policy? What is the immigration policy? We're still finding those things out.
And I think we both touched on this. Consumer confidence, took a little bit of a knock yesterday. I mean, we just got to wait and see whether that progresses. A lot of market participants have now got a 30% probability of a rate cut in March. What would it take to get you to a rate cut in March? Because the building consensus before Christmas was the back end of 2025.
Yeah, so the sentiment has really shifted. I know this in my job. We were only getting questions about what would it take for the Fed to raise interest rates, right? That was actually where the narrative was going, where the discussion was going. Since we had a softer inflation reading, again, there is economic data out there. I know we're all focused on DC. Since we had a softer inflation reading for the month of December, I think that really does put March back on the calendar as a possible cut. It's not our base case that they're going to cut at that meeting. In January, and it's going to get really nerdy here, so just to put that caveat out there.
If you're going to be nerdy, this is the place to do it, Andrew, so go ahead.
Thank you. Residual seasonality, the idea that January inflation data just keeps coming in strong. That happened last year, it happened 2 years ago. There's a problem with the seasonal adjustment. If that January inflation reading comes in strong again, then it might be hard for them to get to a cut in March. But if we don't have the same residual seasonality, we might not, and that January inflation reading looks like December, looks like November, which were at target inflation, all of a sudden March becomes a real possibility.
I have to say, you probably feel somewhat relieved this week that probably the tech analysts at Citi got more questions than you did, but I'm sure you got some of it. And I kind of wonder, okay, so you have this narrative of all of a sudden AI can be done cheaper, more energy efficient. If that is the case, and we saw some metals sell off, copper sold off, oil sell off, nat gas was lower, could this put us in another bigger picture disinflationary trend if some of the spend that we had been doing on energy and on metals starts to wane?
Yeah, so that could be really good news for the economy, right? It's basically a positive supply shock is how economists would talk about that you thought this technology was really expensive. It turned out that this technology wasn't as expensive. There's still questions about whether that's the case, but if that is the case, that's disinflationary, that's productivity enhancing, good news for the economy. It can still be bad news for the equity market because some of those valuations were based on you were the special supplier of that investment good that was needed for this build out. So not necessarily good for the equity market, but good for the economy.
Do you think someone asked Powell a question on it?
Probably.
Poor Powell. Don't envy him today. Andrew, seriously. Andrew, thank you so much for joining us. Always a pleasure to have you on, get your wonderful thoughts. Andrew Hollenhorst of Citi. Okay, a quick check on these bond markets. Not a ton of action this morning. We have seen a rally continue for a second day. A strong 7-year auction yesterday, Manus, and we were just off to the races. It has been bond buying. We are so far away from those calls to start the year. Remember, everyone was saying 5% 10-year yields was the call. That's changed.
I mean, people were talking about 5% and 6% just before Christmas. This is positioning going into this. It's interesting. We've come down about 20 basis points since the middle of January, Danny. So we're setting up. There's been a reversal here. The question is, JP Morgan's client survey, net longs, they're the highest in 15 years going into this Fed and going into the start of this year with equities just 1% shy of record highs.
Well, hey, if growth expectations are coming down, if consumer confidence is coming down, that should mean that yields, too, move lower. Coming up, we're going to talk about the big tech earnings. You got Microsoft and Meta on tap, with Alibaba also offering a new AI product, too. A lot to cover. We'll have more on that on your brief coming up. It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Now, U.S. AI firms are staying alert amid DeepSeek's debut of its latest model. Microsoft and OpenAI, according to Bloomberg sources, are investigating whether DeepSeek obtained unauthorized data output from OpenAI's tech to train its new R1 model. Those sources revealing that security researchers from Microsoft observed a large transfer of data in the fall by individuals that they believe may be linked to the Chinese AI lab and hedge fund. Joining us for more is Matt Bloxham from Bloomberg Intelligence. Matt, if this did happen, if the probe proves that it did, what difference does it make for our understanding of DeepSeek and some of the AI ruptures that were caused earlier in the week?
Yeah, I mean, to be honest, probably not so much. I mean, you can see why Microsoft and OpenAI are kind of looking into this, and they need to, because they have fiduciary responsibilities to their shareholders. But I think the important thing here is that DeepSeek has really shaken the market up, and OpenAI needs to be really focused on developing the next generations of its product and really understanding what's the game changer about DeepSeek, which is really that it can perform as well as these big US models for seemingly a fraction of the cost. And so I think that's going to be a really important part of the next generation of AI that comes out of people like OpenAI and Meta. So, I mean, even if they prove that there was wrongdoing here, I think it's going to be very difficult for them to enforce anything on a company like DeepSeek that's China-based.
Matt, Alibaba's just dropped their latest version of Qwen 2.5. So this is DeepSeek, followed by Qwen. This is now a much bigger issue. It's not just about China, US. This is about open source versus closed source. What are they promising at Alibaba?
Yeah, that's right. So, I mean, I guess this kind of plays the point I just said that, that the AI market is evolving at a really rapid pace. And, we've seen this with the QN model. I think right now it's too early to say, but obviously the headlines from Alibaba that this new model outperforms the DeepSeek model across a whole range of kind of industry standard benchmarks now. There's a lot of gaming of these benchmarks, so I think we'll have to wait perhaps a matter of hours or days whilst engineers get their hands on this new Alibaba model to see how it performs in real life. And what you tend to find with these large language models is that some of them are really good at very specific things like kind of complex maths computation. Others are much better at natural language and kind of giving really human-like textual responses to questions. So I think we'll have to see how good it is in real life. But as you say, that the whole OpenAI kind of closed proprietary model is kind of really in focus. I think probably for most people that OpenAI open solution is the one that's going to come out on top.
Yeah, again, really proved that this week. I just feel bad for Google and Gemini and all this, because by all accounts, they have a cheaper model that also functions really well. But we are going to be getting Meta earnings, and we're going to hear from Mark Zuckerberg. We're joking with Andrew Hollenhorst that maybe more people want to listen in on that call than listen to Fed Chair Powell. But how do these tech players, how does Zuckerberg defend all of the capex that they've been doing around AI when it becomes clear that there are cheaper options available now?
Yeah, I mean, it's been interesting. We had 80 billion from Microsoft, 60 to 65 billion of capex for 2025 from Meta, which really surprised people. I think they're going to hold on that stance for now. They have very clear plans about what their kind of needs are going to be and where they're taking their midterm strategy. Obviously, Meta has its own open source Llama model. They know how that performs. They know where it's going. I mean, I don't think you'll see any kind of knee-jerk reaction, but clearly these companies are very nimble. And if it turns out that Meta doesn't need to spend $60 to $65 billion on capex to deliver the kind of performance they think they need to with Llama, that they'll cut back. But I think we won't see any kind of significant shifts in these big US spending programs, perhaps until late 2025, 2026 at the earliest.
Well, a heck of a lot of sentiment hinges on it standing up those capex numbers. Matt, thank you very much. Matt Bloxham there of Bloomberg Intelligence, setting up the tech day ahead. Let's turn our attention back to politics. President Trump shaking up Washington with a freeze on federal grants and loans and offering federal workers buyouts for those who don't want to return to the office. Now, this as a judge temporarily blocked the spending halt due to concerns over the constitutionality. Andy Karen is tracking the story for us yesterday. And there was a mass panic on these trillions of dollars worth of cuts that were proffered, stopped by a judge. Tell me this, is this a chaotic mistake or a test of constitutionality?
Well, I think it's a signal of intent, Manus, from the Trump administration that they are deadly serious both in terms of reshaping the government along their own outlook, their own ideology, and, of course, deadly serious about reining in what they consider to be wasteful spending where they can. And, of course, in a year when there's intense scrutiny on the fiscal side of the government with planned tax cuts coming down the road. Now, as you mentioned, on the one hand, we had that pause on federal grants and aid, which did trigger a lot of immediate concern, so much so that there was a pushback in the courts against it, that challenge to be expected from NGO groups. There was also confusion about the implementation of it. The White House had to clarify later on that it wasn't as broad in a scope as initially it was interpreted. But again, it spoke to the intent of the government. And on the other side, of course, as you mentioned there, that ultimatum to workers in the federal government to either return to the office or take the option of a buyout, highly unusual program that the federal government is offering. It all adds up to the idea that the administration is very serious in pushing through how it wants to reshape the federal government.
And of course, all these have economic impacts. And on that last point, and we were asking Andrew Hollenhorst of Citi during the break about what the impact could be if you have America's largest hirer, the largest employer, starting to lay more people off and offering people these buyouts. He said you could start to see it show up in the labor numbers in September. How should we look at this sort of thing and the bigger economic impact of offering workers buyouts if they don't want to return to the office?
Well, it's clearly going to be a valid question, Danny. I mean, again, on paper, if we do have a scenario whereby the federal government is losing a significant amount of staff, and as you mentioned, government hiring was one of the key support pillars for the labour market last year. If that's happening at a time when the federal government is reining in its spending where it can, then, of course, obviously on paper that would suggest pressure on the labour market and perhaps less support from the government on the spending side too. But we don't know the details yet. We just don't know how wide and how deep these potential federal employee departures might be. We don't yet know where the government will go in terms of its support for these grant and loan programs that it offers to states, for example. And of course, remember, the Trump administration makes the point that they're also going to push through tax cuts that will ultimately drive growth and investment. But to your point, on a headline basis at least, when you see a shake-up of this scale being touted for the federal government, obviously that would raise question marks about its implications for the labour market.
And we've seen near unity behind most of the confirmations that have been put in front of the Senate. Slightly more contentious ones coming up. What can we expect?
Well, so far, as you mentioned, some of the key appointments have gotten through Defence and Treasury and State, Manus, like you mentioned. But we're now getting into some of the thornier ones. RFK Jr., of course, as Health Secretary, a lot of scrutiny in terms of his views, particularly in terms of his views on vaccinations. We had, of course, the intervention from Ambassador Caroline Kennedy yesterday, questioning his character. So there's a lot of focus over whether or not RFK Jr. will get that support to go through to the next stage. But by all accounts, it seems like so far, you'd have to say President Trump has, broadly speaking, kept his cabinet profiles, cabinet picks on track. Howard Lutnick, of course, another one for the trade side of things. Not expected to get as much opposition there. And, of course, There's a lot of focus on when the trade team will actually be put in place, because as soon as the trade personnel are in place, then we might start to get much more clarity on the implementation of the new trade policy.
And what a year it's been. And Curran, thank you so much for joining us. I'm sure another busy day ahead for you. Coming up, speaking of a busy day, Fed decision, tech earnings, all of that on deck. We're going to set you up for your trading day next on your brief. You're watching Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. The least anticipated Fed's rate decision at 2 p.m. Eastern time. Don't tell Chair Powell I said that. His news conference will be at 2:30 p.m. We're also going to have the Senate holding confirmation hearings for Howard Lutnick and RFK Jr. Plus, this is what everyone will be listening to, the earnings from Microsoft, Meta, Tesla, IBM, all of that, Manus, comes after the market close.
Well, tech got a nice little bounce this morning in the form of ASML in Europe. The US shares are gaining, shrugging off concerns from DeepSeek and staying bullish on the AI demand. Lam Research, what we've got there, Danny, is higher ahead of their earnings after the market close. And again, it's all about the chip-making tools. That's what ASML is, along with Lam. And then F5 Networks extending their post-earnings jump after raising its full-year growth forecast. But all ears and attention will be on the capex and justifying the capex, Danny, of those two big hyperscalers.
Look, there's probably going to be a lot of relief, and you're referring to Meta and Microsoft, of course, who report earnings. There's going to be a lot of relief that there hasn't been follow-through from Monday, that we've seen a break in the worst of selling. You can see pre-market, some of those shares are still off, specifically Microsoft. I think NVIDIA is still down in the pre-market too. But maybe this suggests that it was just this kind of mini panic, and we're reassessing things after because we don't truly know the impact of having cheaper AI. A lot of it's going to come down to what these companies say, Manus. And as we were talking with Bloomberg Intelligence, Matt Bloxham, maybe they don't change their spending plans yet, again, because they won't fully understand what the impacts are.
No, and plus we've got this investigation now in terms of DeepSeek. Well, how do they get a hold of their capacity to build this model? What are the impacts of that? You've got Alibaba coming into the market and saying we've also revved up our AI proposition. Looking at what Peter Oppenheimer said at Goldman Sachs, he said the AI sell-off isn't the start of a bear market. That's triggered by falling profits. And the cheaper entrants deliver increased confidence.
Or Nassim Taleb saying that this is just the start and there's going to be more wild swings of NVIDIA. But are you surprised that he said something like that, calling another gray swan moment coming to pass? So perhaps that's not so surprising.
Indeed. Well, somebody, you know, if you cry wolf often enough, eventually it happens. Tonight, there's a little bit more of me. We're not together, but this time it is 9:30 Eastern, the latest episode of Bloomberg's Chief Future Officer with the future of Prudential's Janella Frias. She joins me for a conversation, and it was good, along with the CEO. That's it for Bloomberg Brief. Yeah, no, it was good. It was actually quite interesting. A lot of AI in it. There you go. That's it from Bloomberg Brief. Surveillance up next.